Welcome to Illuminati Silver. We tell the truth about silver. Today is Monday the 11th of October 2021, and we're producing our Monday morning gold and silver price update, forecast and daily news. Today we see oil prices rise, the US dollar also rising while gold and silver dip slightly. JP Morgan says buy equities as inflation is transitory, even though most of the evidence points to the contrary. Now before we take a more detailed look, just a quick shout out to 3 videos we produced over the weekend. Our Gold and Silver Weekly Update for weekend in the 8th of October, Gold and Silver's reaction to the Nonfarm Payrolls. Broadly repeated in our Sunday video, Gold and Silver remained flat last week, though Nonfarm Payrolls disappointed. And central banks worried about inflation. Is this good or bad for gold and silver? Interesting that we put that out and then we get an article on inflation on Bloomberg this morning. Anyway, let's now go and look at that news. Welcome to Illuminati Silver. It's Monday, the 11th of October 2021 at 10:30 a.m. GMT +1. The weather outside, promisingly tropical. Yes, the sun is out, it's warm, the sky is clear, and it's looking as if we're going to have a tropical day. Now, you have to bear in mind we live in the United Kingdom, so tropical might be anything over 70 degrees Fahrenheit. Whereas at the moment, it's 61 degrees. Now we know many people listening to us will regard that as cold, but in the UK, it is tropical. Well, things are heating up too on the news front, particularly with oil, which we shall take a look at in a moment. But the main headline is World's Energy Chaos Turns Russia into top emerging market pick. And then immediately underneath we've got oil surges past $81 with global energy crisis boosting demand. And we also have a headline which we shall look into. Goldman and JP Morgan say buy the dip as inflation is seen as temporary. They are now repeating the words of central bankers. But those of you who listened to our video yesterday may take a slightly different view. So let's look at Russia. Surging energy prices are kindling bullish bets on developing nation exporters, with Russia emerging as traders' favorite investment destination. Russia's ruble has gained more than any other emerging market currency this month, bolstered by the prospect of higher oil revenues, while the nation's stocks outperformed as a broad gauge of developing equities sank. OPEC's monthly report will be closely watched this week as investors seek further clues on the outlook for the oil industry. Now, this is really important. It makes an important point. You have in the investment field chartists and fundamentalists. The chartists will look at things like moving averages and MACDs and various forms of resistance and support levels, not to mention Fibonacci and a whole range of other predictive tools. And it's essentially based on price action and past price action, forming some form of template of futuristic type forecast based on historical data. Then fundamentalists will look at the fundamentals of whether it's a product or a commodity or a market in general. We believe not only is there room for the two, but we also have to look at this third factor, which is news. Because although once you see it on Bloomberg or Reuters or on BBC or whatever news channel you look at, it's already history, very often major moves take a little time to actually pan out and evolve. And so as a result, from the news, which is why we focus quite a bit on it, you are painting a picture for the future. And we have said for some considerable time, the price of oil, which should allow people to make money and at the same time be fair to consumers, should be in the $50 range. OPEC and OPEC Plus meeting tended to fix it closer to the $70 range, and some pundits quoting we could have $100 oil anytime soon, We didn't think it would go up quite to that level, but we could certainly see $80 being a norm. And now this gas crisis is going to cause that, and we'll take a look at that in a moment. But this gas crisis has been on the cards now for nearly 2 weeks, and we have mentioned it time and time again. So those of you investing in other things other than gold and silver, and there are some of you that have a portfolio, then your attention should have been directed towards Russia, especially last week when we mentioned the fact that Russia promised to provide the West, subject to certain criteria, with lower price gas. Then basically that's where your money should have gone, providing you're willing to take the risk and you are willing to invest in a competitor/enemy country. But notwithstanding that, there are a whole range of other equities that have risen on the back of the problems experienced with natural gas. However, inflation is another issue. And on the weekend, we produced a video entitled "Central Banks Worried About Inflation. Is this good or bad for gold and silver?" Now, this morning, we see this article. Stagflation fears may be rising, but strategists at some of Wall Street's biggest banks say it's a good time to buy the dip in stocks. Despite near-term uncertainty, we expect the equity market will continue to rally as investors gain confidence that the current pace of inflation is transitory. Strategists at JP Morgan Chase & Co., led by Mislav Matejka, concurred, writing that stagflation fears will start to fade. Jitters over surging prices and concerns that the post-pandemic rebound is now past its peak dragged the S&P 500 index 5% below its September record last week, after almost a year without a correction of this magnitude. Persistent supply bottlenecks, along with a slowdown in China, have raised doubts about whether stock valuations can be stretched any further. Our view is that we will see equity markets rise again, certainly in the US, once the Biden's package is passed. This is the restructuring infrastructure bill package. Now, of course, that depends as well on how long that will take. Stocks drop as surging oil price unsettles traders. US futures dipped with European stocks as the highest oil prices since 2014 stirred fears that a spreading energy crunch will derail the global pandemic recovery. Fuel shortages in China and Europe bolster the case that higher inflation will persist, so this opposes what JP Morgan & Co. have said, beyond the expectations of central bankers, pushing them towards faster rate increases to redress price pressures. Friday's US payrolls, which we covered on our weekly update, report showed jobs growth below estimates, even as rising wages were seen stoking inflation, and we covered that as well. We see rising risks to global growth and evidence of more persistent inflation, which makes us more cautious on the outlook for global markets overall. Salman Ahmed, global head of macro and strategic asset allocation at Fidelity International, wrote in a note to clients. Let's have a look what the BBC are saying today. Firms call for action over surging gas prices. You can see what's in the headlines. China bans British beef again over mad cow disease. Is this why the British are so eccentric? Liberty Steel cash injection to save 660 jobs. And Australian gambling giant Star Entertainment will take appropriate action or steps to address allegations of money laundering. It's quite important. Not so much the product, but the genre. Get used to higher food prices, says Kraft Heinz. The boss of the food giant says rising prices are partly due to pandemic disruption. In the United States, there's going to be talks between US and Taliban. US couple accused of selling nuclear sub-secrets. And of course, as we've already mentioned, this is 3 days ago, the Senate averts US debt default crisis for now. Facebook apologizes as their services are hit again. And a little bit of anti-Trump stuff. Trump's DC hotel lost $70 million during his presidency. What's happening to the financials? Dollar is up. We've said 94 key area. Expect further strength after Friday's report, even though the job data was not great. The overall package was the economy is still recovering. Energy, we've just mentioned that. WTI crude is now well ensconced into the $80 level at 81.39 and Brent crude at 84.12, up $2 and $1.73 respectively. Equity markets, again, we covered what happened to the US in our weekly update, and we could see that on Friday the markets were marginally down, but for the week as a whole they were up. Asia Pacific overnight, very positive, in fact, up over 1.5% to 2%. But in the UK and Europe, we are marginally down, although UK is marginally up at 0.19, but the rest of Europe is down. Economic data. Won't be any in the US today to speak of. So this is why the news schedule will be perhaps more important and influential on prices. Tomorrow we have job openings, but Wednesday is quite important because we've got the Consumer Price Index and core CPI, and Friday is arguably the most important because we have those retail sales figures coming in. Gold prices this morning down almost $4 at $17.53, still holding above that important $17.50 level. Silver prices also down 12 cents at $22.55. As long as it holds the $22.50 level, you're okay. If it doesn't, then it could quite easily fall back to $22. You can see there are some attempted rises here, but then we're getting the continual fallback. And quite frankly, as we've stated again on the weekend, there's not an awful lot of news available to really bolster gold and silver prices at the moment. Most of the information coming out are acting as headwinds, though today there won't be that much economic information being announced generally, and therefore we're not expecting dramatic moves unless something geopolitical happens today. Cryptocurrency market, Bitcoin on a further tear, up 3% over the last 24 hours at $56,575. And the market in general is up 1% at 2.34 trillion. Well, that's it for now. Just a quick shout out to our videos. Yesterday, central banks worried about inflation. And then also yesterday, gold and silver remained flat last week, and our weekly update on Saturday. That's it for now. Have a great day, everyone. Please give us a thumbs up or a thumbs down. Subscribe, press the bell sign. Until our next video. Illuminati silver owners come from a background of banking, international wealth management and economics. Having now retired from these worlds, we are not qualified to give investment advice. Therefore, this and other productions must not be deemed to be giving such advice and merely represent the personal views of its owners.